Hello, 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 everyone. I hope everyone is having a fantastic week so far. I'm just going to bring up on stage my co-host here, Guillermo. I am your digital marketing specialist here at Chromia, and Guillermo is our head of marketing, and we have an amazing guest this week that I know is going to share his wisdom and knowledge that will make you want to take notes. So joining us today is Todd Miller. Todd is the managing director of Phlomis Finance, a new platform for resilient investing in real-world assets. Todd, I'd love for you to introduce yourself to our listeners. Could you share a little bit more about yourself? Perhaps what's your background and what your origin story is on the blockchain in RWA?
Absolutely. And Claire and Guillermo, thank you for hosting me today, and glad to talk about Phlomis. And thanks to folks in our community who've joined to hear more about the project. So yeah, first of all, coming to you from the US, I'm on the East Coast in Washington, DC. We have a handful of folks who are in the US, mostly in Europe and in Asia, but I'm here in Washington and have been here for several years. Actually worked in traditional finance. This is my pre-Phlomis and pre-Chromia years. Worked in traditional finance with an organization that folks may have heard of. It's called Fannie Mae. Fannie Mae is a traditional finance organization. They securitize with another company called Freddie Mac about half or more than half of U.S. mortgages. So this is sort of a secondary market for mortgages. The U.S. is one of the few places where it used to be that you could get a 30-year loan. That's because these mortgages were rolled up into bonds and people could invest in them. But I worked there and focused mostly on like the digital technology around the whole life cycle of a mortgage, from origination through servicing and through securitization. So was able to sort of see that process and see the challenges in it, and motivated me in the finance area to try to address some of those problems. And actually joined Chromia in 2017. We were much smaller and focus on the financial vertical. Actually started a lot extending that work into property. Folks may be aware that Chromia was a big innovator and still is in property transactions. We did one of the first projects with the Swedish Land Registry, and I've worked sort of around the world in Australia and Canada and Asia and South America around putting and recording property transactions on chain. We recently finished and are really still working on a project with the Inter-American Development Bank around the digital process for buyers and sellers, to record mortgages, to do property recordations on chain. So this is exciting work, and it's sort of, and we'll talk about this in a little bit, it sort of evolved us towards tokenization of property, and then evolve that towards tokenization of other types of assets, which we'll talk about. So just a little bit about my background.
Yeah, I thanks for the introduction, Todd. And I just want to say that I love since I've been in crypto and in blockchain involved professionally, I always love to talk to people that come from traditional finance, because they have such a broad view of the world of finance, that where the traditional and so many products and so many and the past, and they have the knowledge and they've seen the evolution from them to now. And for us, that we are more crypto native, in the sense that it is like sometimes we forget or we lose, we don't have the background that people like you have. So yeah, it's very cool to have you and to get your thoughts on and it's very, very cool that you're here to let us know about Phlomis and about the world of real world assets. Definitely exciting.
Yeah, and if you think about it a little bit, I mean, what we're talking about with real world assets is taking off-chain assets, and it could be as simple as an investment like a equity or a debt, or it could be anything like tokenizing specialty cars, or it's tokenizing IP, but making it through fractionalization, making it available in our crypto environment. So we're trying to build a bridge between what has really been traditional finance to this sort of new infrastructure and this new plumbing and this new way of thinking about, asset ownership. So.
Yeah, I feel like that's what a lot of us have been waiting for the real world assets to finally become on chain. And I know there are a few projects that do that. And I'm so grateful that we have this conversation today as well, where we can really get into the details of it. And maybe you can give some advice as well. But maybe you can share with us some more examples as to why it is important for these real world assets to be on the blockchain and within the crypto industry.
Sure. I think first of all, it's really providing choice and like optionality to crypto investors. One of the benefits of the crypto world is that it has really democratized access to owning an asset, but most of those are native assets, right? Native digital assets. So if you talk about Bitcoin, or you talk about Ethereum, or you talk about a CHR token, these are minted on chain and then offered to owners, investors. It could be used to play a game. It could be used for payment. It could be used for holding as an asset. But that's still limited to crypto assets. And crypto assets have incredible benefits, and we're seeing those benefits expand, but it's only one type of asset. And so most investors want to hold a diverse portfolio of assets. So you probably do want to own crypto because of the great upside, the tradability, the transparency, but you also want probably more stable investments, or investments that have different types of properties, like they give dividends, or they allow you to collateralize them, or they allow you to in our case, which we'll talk about, Claire, more as we get into it, they allow you to have more impact on certain social, environmental challenges or problems that we're all facing that we want to try to solve through investment. So, I think it's really a question of diversifying the options that are available to potential investors.
Yeah, we definitely want a broad portfolio whenever we're coming into investments, and then being able to put real world assets into that portfolio on blockchain. I can only imagine what the future might hold in terms of maybe inheritance, like being able to transfer those assets after one wants to leave them behind for our family members and things like this. So it's fascinating. Genuinely. But I really want to get into Phlomis Finance. Would you be able to share with us the genesis, the beginning, like how did it all start?
Yeah, I talked about a little bit in terms of like so many projects that we all get involved in. It was really an evolution. So from the Chromia perspective, which is the builder of Chromia, we started around land titles and property. And then about 3.5 years ago, we looked at tokenizing real estate. And we actually have a partner in the Netherlands that called Blockhouse. And they are a investment management and asset management platform that we've integrated to allow for real estate and other types of similar assets. But real estate is a big opportunity. The only challenge was that real estate is a really complicated asset. If you talk about the success of crypto, a lot of it is because you have sort of native digital assets that are already in a form. They don't have any ties to it's all on chain. You have instant settlement. Real estate, as people know from around the world, is a much more complicated asset. And that we found that the both from a regulatory perspective and from a a sort of liquidity perspective. Real estate doesn't trade very often. People seem, even on the commercial side, they buy and they hold. If you have a house, you're probably going to stay in that for a while. And we started looking at other like investment assets as a much easier place to start. And then we observed that the success that was happening around like treasury and money markets, those were being tokenized. People probably saw that BlackRock, who's one of the biggest asset managers in the world, they've tokenized a treasury fund. It's called BIDL, I think, and it's already like zoomed up to close to $1 billion. And that just told us that crypto investors, and mostly we'll talk about this more, stablecoin holders, a form of crypto, and actually a form of RWA. If you think about stablecoins, they have a crypto sort of package, but what's behind a stablecoin? Treasuries, could be US dollars, other forms of, so you're really tokenizing the US dollar. There's also stable coins in euros and other currencies. But we saw that as crypto holders were looking for stability as part of their portfolio, they were buying stable coins. They were using them in DeFi transactions and other uses. But the interesting thing is they weren't getting any yield from them, right? You own a stable coin. One of the nice features of it is, well, it's like $1 for $1 or euro for euro, but you're not getting the yield. It's really the issuers of those stable coins, whether it be Circle for USDC or USDT, they're getting the yield. So then the holders of the stable coins are saying, can I invest in something else that can be as equally stable as a stable coin, but get some yield? So we've seen that those market really grow, and really the growth of the stable coin market, I think it's like almost $180 billion right now, has really also catapulted the RWA market, because now it's become like that's the kind of the currency of the market. So it allows us to integrate easily with payment providers and on-chain payments who are holding these stable coins and so forth.
So I guess the genesis of Phlomis Finance really just came from this opportunity of seeing how the market has been playing out and how much it's growing. And I guess my next question would be then, what about for the future? What about the vision for Phlomis? What is the big picture?
Yeah. So, I mean, I think there's a couple things. I mean, we're just launching, so talking too far in the future, we want to be sort of like careful about, just to keep our eye on the ball here. I mean,
maybe they're like the vision of the future, maybe like the starting point where we are today, right? Like what is Phlomis and what is trying to do.
Yeah, well, I'll get back to Claire's question because I think it is a good one, and we do have a vision around this. And as everyone knows, like, you need to have a vision in order to put the short-term steps together. And I think we'll talk about that in a second. But near term, we're focused on a couple of things. And first of all, I wanted to chat about this. I mentioned this before. We're working in this segment that we call resilient investing, and we mean resilient sort of three things. First of all, it's the types of funds, the types of investments that are going to be available to crypto holders, crypto investors, meaning that we want them to be a little less volatile, but have, I mean, in some cases, much less volatile, but have more like expected returns based on what your financial goals are and what your investment goals are. So we want to bring in very high quality funds. Again, it's this notion that I think today I read somewhere that 1% of investors in the world control 65% of the assets. And I think in the US, I think something like 10% of stock investors have 90% of the stock assets, equity assets, and so forth. So we can see a very significant inequality of access to these investment products. And so we're really going to large European and Asian funds and saying we can tokenize your fund and we can offer it in a fractional amount to our investors, this new channel of investors who want to do business, through their wallets with stable coins, or eventually also with other kinds of tokens, who want the transparency of having like on-chain recordation of their shares, who want to be able to trade and collateralize those shares and so forth, and have a lot of the features that we enjoy in the Web3 crypto world, but aren't available yet for traditional investments. So we want to make that translation. The other thing about resilience is, again, I sort of reference it as the technology. Today, most traditional finance investments, if you look at sort of the back office, they're on like multiple databases. You have to use a number of different settlement agencies. There's lots of intermediaries, which charge lots of intermediary costs, and so we're trying to streamline like the back end, so there's less cost to the investor. There's faster settlement and also sort of lower risk. And the third thing is really around impact. I mean, that's, I think, one of the main innovations we're bringing. We looked at the market segments about what's available in this new RWA segment, and we didn't really see anything about impact. And although we know like crypto investors have lots of concerns generally about maybe some of the ESG products, some of the sustainable investment products, because they're concerned about the political elements, or whether they really have impact. There's a whole greenwashing. We know that these impact segment can both deliver yield, solid returns that compete with any of the conventional investments, but they also can show results. So whether it's a private debt impact fund that lends to microfinance institutions in the developing world, that creates jobs, creates wealth, adds to the capital availability in these communities, or it's around like climate change technologies, which are some of the highest growth areas. We think this impact is like an important element for people to consider as another option for their investment. And those are kind of the three areas, like quality funds, Web3 technology, and results and impact recorded on chain. So.
Amazing. Yeah. I can't help but take note as well that when you mentioned there's going to be a lot of, we're cutting out the middleman, really. And it's nice to be able to see that people will be saving money, but there's going to be some resistance on the other side where they'll be wanting to get that commission, but I guess what is really interesting, and maybe Guillermo, you can expand a little bit as well, but how do you see the vision reshaping the investment landscape?
Yeah, Claire, first to your point, you're right about resistance, and a lot of it is a function of regulation. So in traditional finance, whether you're in Europe or Asia or in the US, there's lots of regulations around what a security is, how it can be transferred. There's transfer agents, there's settlement agents, there's certain rules, there's custodians, there's sort of let's call it like a capital supply chain, like any supply chain, how you get it from like issuance of the asset to settlement with an investor. It goes through many stops, and many of those stops along the way are required either by a national government or a local government jurisdiction and so forth. The exciting news is that two things. One thing is, in the Web3 world, the crypto world, new participants are emerging who are digital custodians who are using the same ledger for settlement. It's funny, in the traditional financial world, there's a new law in the US, it may be in Europe also, is that you have to settle, today you have to settle within 3 days, right? Of if you buy like an equity. You know, like if you invest in Tesla and you buy a share, that share has to be settled on the back end in 3 days. Which is, you know, from a crypto and digital asset perspective, pretty funny. Like 3 days. Like no one is. Like we were complaining about minutes for Ethereum or for you know, minutes for Bitcoin, or for, you know, for Chromia settles very quickly.
10 minutes. 10 minutes is too long. Yeah, like for Bitcoin, I don't have time for that.
Yeah. And 3 days, I mean, 10 minutes to the traditional finance industry would be a dream. And actually, they passed a new law. You have to go 1 day. So it's called T-3, now it's T-1. I mean, can you imagine waiting 1 day for your crypto asset to settle? So this is what's exciting about this new sort of plumbing that is being stood up around world assets to be able to deliver faster settlement. And what that means is less risk, because if I've done a trade and I'm waiting 3 days, I have risk around that's cost. If it's a larger amount, if you're trading millions of dollars, that is a very high risk, and it's also cost because of the time lost of money and so forth. So just push back there. So that was the first part, and Claire, I forgot the other part of it before I answered that.
I mean, no, it's okay. I mean, I've got so many things just going through my mind.
Financial systems. I mean, sorry.
No, but I wanted to make the comment about what you were mentioning, Todd, about how it's funny how from traditional finance, the view of digital assets is, especially on the past, in let's say 3 years, 5 years, something like that. It was like, it's not regulated. It is very risky. It is very volatile, and more, even though the acceptance of those digital assets is taking baby steps, the adoption of the technology that allows that digital assets to exist and to be as efficient as they are today is something that the industry, I think, it is absorbing in a higher pace, and definitely, you know, in a way, reshaping the investment landscape, not only for the companies, but also for the user, for the investors. How do you think it? How do you see this? I mean, what do you think is the investment landscape is looking today compared to, let's say, 5 years and even 5 years from now?
No, you're right. I was at a conference in New York this week. It was called the Real World Asset Conference. And it's funny, I went to it last year, and I've been to some other ones. And usually, like, the larger financial institutions are in the back row watching because they're not ready to jump in yet. But now they're on stage presenting what their projects are. And they've all gone beyond, you know, just proof of concepts. They're out providing you know, products in a digital form. So I think, you know, the big change will be, and I think we're sort of in phases here. And so right now it seems like we're in this sort of phase 2, like adoption phase, where we're using these Web3 tools like wallets, digital custody providers, stable coins to purchase investments. And we have a sort of limited set of investment products that are available, you know, mostly for these treasury products, because, you know, for example, people who are, you know, maybe have a checking or savings account, well, because of, even though interest rates have been a little bit higher, they may only be getting less than 0.25%, 100 basis points or something on their checking account. But they can put it now into one of these tokenized treasury products, which is very safe. And they can get, 4.25%. And now there's going to be new products, and some of the products that we'll talk about, like maybe in a future AMA, are these private credit products that can get, anywhere on the low risk side to 6.25, to the high risk side to 18% or something. And so you're going to see more products diversify. And the other, I think the big future where we want to get to in the next phase is really around trading, right? Because, okay, today, one of the big challenges is that because of national regulation, you have to be approved through KYC and AML to be able to own a tokenized asset, right? So, if you have a native digital asset like CHR or Ethereum or Bitcoin or, one of the other tokens, you don't have to necessarily go through that. If you're working with a centralized exchange, you do. But for tokenized real world assets, because they're considered securities and they're regulated by national governments, either in Europe or the US or Asia, you have to go through KYC and AML. So if I want to trade it and say I have a private credit product, it gets 7% a year return, but you know what? I want to trade it to Claire. And if I was a native token, I could send it to her wallet and, okay, thank you, that's all good. And we would name a price or something. But for a tokenized asset, you have to go through KYC and AML, so you have to be whitelisted. So on Phlomis, we have an on-chain whitelist, approved list of investors. We could put Claire through that first, but it's a little more of a pain, right? She has to go through that process. So until we sort of more figure out, and the biggest thing we need to figure out is identity, right? Because if we can get Claire or you, Guillermo, or any of the people on the line with like a self-sovereign identity, where once they go through KYC and AML, it passports across the platforms or across investments, that's going to be really exciting because I don't have to go through a little bit of the pain that I have to do today for trading. Because mostly private assets aren't traded as freely as either public securities like Tesla. I can go in and trade quickly, or I can trade crypto. But this middle area on private assets, where it's the biggest growth area in terms of the investment market, but it's still sort of limited by some of the regulation. The one thing I wanted to just mention is the last thing is around DeFi protocols, because I want to be able to, the great thing will be able to collateralize. If I have one of these treasury notes that is paying a nice return or a private equity or something else, and I want to collateralize it because it's got value, can I go onto a DeFi protocol? Right now, Bitcoin or Ethereum or a stable coin has a lot of price transparency, but can we do the same thing for these other assets? So those are part of the infrastructure that we want to build out with Phlomis, and also interact with the ecosystem around Chromia and around bridges with EVMs and so forth, to try to build out that plumbing. So not only do you have a tokenized asset, but you have an asset that can be freely traded, you can take a loan against it. That's a really exciting stuff.
Definitely, when you start getting and understanding the how the integration of tokenized assets into the whole Web3 space and all the possibilities that it opens with DeFi and with lending is definitely exciting and bullish in the sense of all the inflow of new assets, and not only assets but also liquidity, investors, and new. It opens like a dam, and water pours into the space.
No doubt. And I think like the rails and the infrastructure, the governance mechanisms that are being developed in the crypto world are now being applied to the off-chain world and to bring them over. And that's really exciting because they've been tested. We've been able to scale in those areas around safety, around compliance, around developing these DeFi protocols. And so now there's a lot of work being done around, okay, how can I take those assets that are off-chain now and bring them into this this new world. So
it's going to take a bit of time for people to get used to. But one thing that I think people are going to really want to dive in is this resilient investing. So it definitely sounds like a powerful concept that I'm sure everyone wants to attain. Can you dive a little bit deeper into what that means for investors during uncertain times?
Yeah, so I think like look, the investment world, even for the most like experienced people, is very challenging. And in most I think like, again, I hope I'm not being too US centric, but I think only about half the people in the US own a some sort of a mutual fund or an ETF or invest in any sort of regular way. And so I think, and you know, the U.S. is one of the more wealthy countries, so it's probably lower, certainly lower in the developing world, and sort of mirrors probably what happens in Europe and Asia. But so we want to really take this notion, and just to step back a second. I mean, the whole crypto world grew out of really the Satoshi Nakamoto writing a white paper in 2008 and the birth of Bitcoin. And really what happened in 2008, we had a financial crisis primarily because of transparency around transactions, right? I mean, ironically, I was at a company, Fannie Mae, that was really in the middle of these mortgage transactions because these were being sold. Mortgages were being sold to a whole sort of set of investors, and they were sort of very derivative of the underlying asset. So this sort of transparency hasn't traditionally really existed in the investment world. I mean, you know, you go onto a site, you purchase even if it's like Robinhood or if it's you know, something more big in the United States like Fidelity or Vanguard and so forth. You send your money in and they say they bought you this investment, but you have no way of really validating that. You know, you're getting a report on your portal and so forth. But the exciting thing about using the crypto rails about this is that transactions can be tracked. And so I can see if I sent in funds to this investment opportunity, I can see that it landed in the wallet of the issuer, in this case, Phlomis, and that it was transferred, in our case, to another underlying fund and so forth. So let's say in our case, we're tokenizing funds in Europe. We can report these are the set of wallets that this money is flowing through. And that way investors can have a lot more confidence, first of all, that their funds are being allocated properly. And then, you know, secondly, I mean, I think we're really trying to be not only a brand, but an underlying set of values around what are quality funds. There's rating agencies. There's just more disclosure, and we can record that on chain. One of the nice things about Chromia, because it has such a large data capability around storing data. We can use, traditionally in investing, there's something called a data room. If you want to go look at the investment, you want to see where are they investing their funds in. We can, instead of reading a 30-page document, first of all, we can record that document on chain. It doesn't have to be off chain. And then secondly, we can render, because we can query the underlying Chromia nodes, we can query for information that can be rendered, to the investor. So it's like resilience from like the quality of funds that are offered, and resilience from the technology, which provides a higher level of trust and transparency for the investor. And then, I think resilience from an impact perspective. I mean, the market conditions, political conditions, change, fairly quickly, and presenting investors with a set of options to them that they know will be of, high quality. They know they can look at the information and its level of high integrity. We think will kind of carry them along. We don't think we're going to be like we don't need to be the only platform. We don't need to be the whole portfolio for an investor, but we think this resilience, there should be a resilient portion of anyone's portfolio. You're going to speculate on some parts of it. You're going to be very safe on other parts, and other parts you want to get reliable return on. And if you want the impact, so.
And of those, it's very interesting, and I'm curious about what some of the things that you said about like giving the investor options. What kind of besides, or question would be, what would be the most innovative kind of option or fund that you can provide to investors through the Phlomis platform? What are they gonna find there that they're gonna be like, oh wow, I can get exposure to this through Phlomis? That's very cool.
Yeah, for sure. And actually, Guillermo, we're gonna announce in the next month or so some of the initial funds that are going to be on the platform. So maybe we could have another AMA, and we'll be distributing that to folks. But I'll just describe some of the funds. I mean,
no need to spoil the news. You can give us some alpha, or like, okay, this is what's coming in a month, like a little bit of a.
Yeah, it's interesting also. Phlomis is the technology provider for these funds. We're not the fund manager, and without getting into a lot of technicalities, because again, this is just in the hope of like transparency and people understanding that a lot of projects that came into like the crypto industry may be run by people who don't know about how to make investments, how to allocate money, how to evaluate credit. And so, for example, we're going to be offering like a private credit fund. And what a private credit fund is, and it's one of the biggest growth segments of all of investing, because what's happened is the banks have sort of pulled back on lending because of like credit concerns, because of like somewhat higher interest rates and so forth. And also, interestingly, because other competitors have come in and said, I can lend to a business or lend to a project or to even individuals, and I can assess their credit worthiness much better than the bank can. I can use technology. I can use it's less cost. So this private credit segment has grown enormously, and investors are really taking advantage of that by investing in these private credit funds that they loan to, it could be enterprises, it could be to other lending institutions, and they're very good at the credit analysis. Because if I lend to Guillermo or to Claire, hey, I want to just make sure they have a capability to pay me back because as an investor, and the fund is representing investors, you want to make sure of that I'm going to get my principal back, and if my return is going to be 6% a year or 10 or 12 or 14%, I want to place those funds with the best investable assets, investable projects, and so forth. So that's why we're depending on the funds to do the credit analysis, to do the have a track record of performance of paying back investors. So that's like an example of what we're going to be offering. And the other interesting thing, there's specialty impact investors. So they have relationships with microfinance institutions in Latin America and Africa and Asia. They have very good long-term relationships with entrepreneurs who are developing climate change technology, and they have the funds have continually invested in these outlets, and they have a history which our investors will be able to see what it's returned over the last 5 years or the last 3 years. So those are the types of products we want to bring. We'll probably start with like one of these private credit funds because it's got a very low rate of failure, of default, microscopic. And then secondly, I just want to talk about liquidity, because I think if you're a new investor in this segment, you probably want to have at least an option of being able to take your funds out if you need them for a rainy day. A lot of traditional finance funds, investment funds, there's long minimum investment periods. They could be, some of the big private equity funds are 10 years. Like you can't take your money out for 10 years. Some funds have a year or something. So we're trying to find different durations. So like a treasury, if you invest in a treasury fund, you can liquidate, like you put the money in, the second day you can get it out. We'll probably look for something in the middle, like several months, because you want to earn enough interest, and we're probably trying to attract investors who feel they can invest the funds and watch it grow a little bit before they take it out, but we want to give them the option. So
yeah, I think what's really fun about crypto is that there is that gamified sense of like the leadership boards, or if you invest and hold for like 10 years or 5 years or 2 years, you get a higher return, you get more of a reward. And there's so much innovation going around crypto that is encouraging new people who haven't necessarily invested before to really take it as something like, wow, I can clearly see. And you don't have to necessarily go through all of the terms and conditions of a contract to be like, okay, what am I actually getting out of this? It is a little bit more transparent. And that is something that's one of the qualities that you say that Phlomis has as well. And I'm excited to see more new people coming into the area, but I know that Phlomis is a bit more tailored to a specific demographic, and we'll get to that in a second. But
yeah.
With so many new innovations coming around, what groundbreaking approaches or features are you offering that could change the way that people think about investing? What unique features and approaches are you bringing to the industry?
Yeah. Well, I mean, to some degree, it is an innovation in itself, because we're just really at the beginning of this RWA segment. So there's a lot of behind the scenes plumbing that's being put together around Phlomis to allow these fund opportunities to flow to crypto investors. So one of the innovation spots like we picked to start out is like these impact investment funds, because they're just not available today. And even though it's a large segment in the conventional community and the conventional investors, it's not really available to this crypto investment community. And one thing we're doing around that is targeting we're trying to figure out, okay, how do we balance financial return, which is really the first filter for most investors. They want to know, okay, what is my expected return for this? How do we balance that as a secondary against impact return? So we're, for example, exploring like an impact token. So not only would you be tokenizing the financial asset, but you're also tokenizing what the impact is. So for example, for a climate fund, can I, and it, let's say it leads to X percentage of CO2 reduction, can I take that reporting and monetize it as a token that has value and so forth? We're seeing that in the carbon credit market, where you can trade carbon credits with companies to allow them. I mean, basically, if I can buy carbon credits, I'm saving carbon burning somewhere else, so I can burn, here, but it's supposed to reduce the overall. But in this case, we're trying to say, hey, can these tokens be used to provide advantages for investors? For example, can they get preferred rates on the investment? Can they get access to other sets of benefits from partners? We're trying to like innovate around the impact side, because although it's a secondary level of benefit. I mean, I think an investor who is probably looking at two investments, one that returns a rate of, let's say 7%, and another one that's an impact investment that gives 6.75%. If I can make the impact more valuable, will an investor say, well, I want to have impact. I'm happy about I'm excited about this project they're investing in, and I can also benefit somehow. So we're trying to figure out those mechanics, just like, and what's nice about the Web3 world is being able to codify some of those rules into the token and so forth. So that's something that's not available in conventional investments. You might get an online share. People used to get, certificates for shares. But here you can have a codified token that carries either the rewards or carries the benefit with it on the token. So that's some of the area we're really, really trying to work with.
Okay. Wow.
Yeah.
Okay. So there's a lot more depth to it than I actually initially realized.
Yeah. Yeah. Because
well,
again,
I guess,
I think like I was just going to say, Claire, just to finish that note, is like,
sure.
I think for like a crypto investor, they're used to seeing like transparency on chain about how many tokens have been minted, what's the distribution, what is the transparent price value. Now they're going to go into these real world assets where price might be more transparent, but these other elements of the investment, can we make that as accessible to them as their native token investment?
Okay, I guess
Yeah.
For those who have been coming in through the AMAs today and might not have caught everything that you've said, I do encourage everyone to go back and listen to the whole thing. But for those of you who have just been coming in, Todd, would you be able to share perhaps like a summary of benefits of having Phlomis Finance on Chromia?
Yeah, and specifically on the Chromia part, for sure, for sure. A couple of things. First of all, I mean, I mentioned this before, but one of the strengths of Chromia, and I know that you and Guillermo have been, trying to talk to the community about this, is the underlying technology is much different than most EVMs. And we saw this like in the NFT world, what happened with the NFT market grew very quickly. And then it was sort of discovered that actually NFTs, the actual image, as an example, is not on chain, it's off chain. So if you had a Bored Ape or something, or you had another high value NFT, it was probably being stored on somebody's database or something that was not as secure, even though it was supposed to be like the unique version. And one of the really powerful elements of Chromia is this concept that our storage facility is a relational database that gives us, much greater capacity to store all the data connected with a real RWA asset. So that's not only like the financial information about the asset, the quarterly reporting about the asset, and also like the impact data, which we're really excited about in terms of being a foundational node for tokenize the impact also. The other thing is, these are financial assets. So, okay, if there's a problem in a smart contract with an NFT, you could probably recover. The value may not be so high. But if you have a large financial investment, $100,000, $200,000, I mean, even $100, and there's a problem with the smart contract, you could lose it. It could be more vulnerable. The smart contract language in Chromia with RHEL is, a much higher level of security and it's type safe. It's a much simpler syntax. It's also the data framework allows for easier querying and indexing. This means that investors who have a portfolio can get better reporting and easier reporting. It's very hard to query a blockchain yourself. You have to download the entire chain, move it to another form, and so forth, and then try to query it. With Chromia, it queries just like an SQL database. So that's very exciting to us. And then I think like on the front end, it's just really more like DApp friendly, more application friendly. We're building, a front end on Phlomis, and it's very easily to sort of interact that front end. So we're going to render data from the chain onto this front end. We can integrate partners more easily. So there's a whole bunch of benefits. We think like it'll be like the go-to RWA chain. So.
Amazing. Guillermo, do you have any follow-up questions at all? Oh, you're muted.
Yeah. Thanks. Yeah, I was wondering what kind of who would you say is, because we're talking about all the possibilities that Phlomis offer as a platform and all the opportunities there is in the RWA market. But I would like to know, who do you think is the ideal user or the ideal investor for Phlomis to go to Phlomis finance platform and use it? What would you say is the profile of investor?
Yeah. I mean, I think, like I said before, I mean, clearly, if you're like a crypto investor that's interested in diversifying their portfolio, so you have to first be interested and say, yeah, I own crypto, but I'm also I want to have a balanced portfolio with other types of assets, and if I can interact with these assets in the same way I do my crypto, this should be valuable to me. I think like on this first fund, we are targeting a little bit more on the DAOs, Web3 projects, funds, a little more business to business, sort of institutional, because before we open it up for retail investors, I mean, we want to sort of prove out the platform. We want to ensure that we have the right customer support, that it's a seamless process, that we're figuring out sort of all the needs which happen like in a new project. So the minimums are going to be a little bit higher. We haven't quite decided them yet, but it's a little more. And folks who might be on the line who have a project, they know they may be holding stable coins, and they're not getting yield on them. And this is a good place to park, even for a short time, 60 to 90 days or less, that you may want to park your stablecoin in this kind of investment. You might, hopefully you want to do it longer. But once we get through the first few quarters with these initial investment products, we'll probably open it up. Then we'll open it up to retail and offer a bigger set. But like in any new project, we want to make sure it works before we expose our community, to the project. So, and we'll be reporting on the progress and, other ways to sort of participate and so forth. But
amazing. Okay, so there's so much that I want to ask you, but we are running out of time. And I would encourage everyone to go to Phlomis Finance on Twitter, as well as the main website as well. The blogs that you guys have been writing have been so informative. So I encourage everyone to go and read those too. I do want to take a moment just to thank you, Todd, first of all, for coming on and sharing some amazing insight into Phlomis. And I'll ask you another question just to wrap up in a moment. But before we do, we have an amazing content creator program at Chromia that I'd love for so many people within the audience and beyond to really get involved with. So we have opened up 4 submissions. It is basically a fantastic opportunity for Web3 creators to be able to create content and get rewarded for it. So there is fantastic rewards. I mean, if you check out our website as well and check out the content creator program, rewards are $800, $500, almost $2,000 for a first place video content creation. It's just beyond me, the amount of rewards that are going to be gifted out. So it's just incredible. The prize pool is I don't know.
And,
Yeah,
and the good thing is that we are already seeing, on social media, we're seeing already people's submissions and people using the hashtag content creator program and posting their videos, posting their infographics, all of them taking a look at Chromia and doing their best to explain Chromia to the rest of the community and the market. And yeah, absolutely. I mean, we encourage everybody to participate. There's still time. So yeah. I mean, go for it.
Yeah, it's so fun to be able to see the talents that our community has. And if you guys think you guys have a talent that you want to share as well, whether that's static or video, please do check out how to get involved. The deadline to create and publish your content is the October the 30th at 12 p.m. UTC. But if you want to be able to get your engagement, to be able to get your content out there, to get more visuals and some fantastic things for the team to check out as well, do it as soon as possible. I really encourage you to do it as soon as possible. But yeah, speaking of prizes, it is that time of the show again where we show how 5 lucky winners can each walk away with $100 in USDT. So if you are listening on Discord, LinkedIn, or Twitter, X, I'm going to need you to go to our YouTube channel. Now, follow our YouTube channel. That's the first thing. And then comment on our latest video. So this is something that the marketing team has been working on really hard. And the videos that we will be posting there are going to be more informative. And also you'll be able to check back and check out the AMAs that we have on a weekly basis. But I'll repeat, you need to go to our YouTube channel, Chromia. Go to our YouTube channel, follow our channel, then comment on the latest video. But we will be pouring out lots of more video content to come. So you need to comment on the latest one. But for us to contact you to be able to get your wallet address, you need to be able to share the video on your Twitter. So go and share it on your Twitter, and then we can be able to cross-reference and be able to reach out to you directly. So comment on our YouTube video, share it on your Twitter. And yeah, follow us. And we will love to be able to see our numbers grow there too. So USD winnings will be sent to you within 72 hours of receiving your wallet address. So make sure to check out our Discord channel as well for our announcement of winners. So yeah, Todd, before we go, what can our community do to increase their resilience? Because we're talking all about resilient in investments. What would you say, would you encourage them to do for their resilience in their investments?
Yeah, I think like I think mainly investing is this thing. I think like it's important to everyone, but we never really got like formal education on it. You sort of learn it from other people. Maybe your parents were involved with it. Maybe you just naturally picked it up. The nice thing about crypto is that it sort of condition and help people learn about how markets work and so forth. And so I think it's worthwhile to, stand back and spend a little bit of time thinking about, in terms of the funds that I might have available beyond my living expenses, which isn't easy. How am I allocating my wealth to different types of investments, and what are my expectations about it? And how do I think that's going to change over time? And do I have the right options to be able to be resilient in a time of climate change, political change, economic change? How will those different investments weather? So yeah, I think really just try to spend a little bit of time just kind of thinking about this segment of your life, which enables you really to do the things that you want to do, and to the things for your family and other people sort of in your community. So
It's fascinating, and I really do love how you said that it is welcoming more people to come in, and yeah, I think it is fantastic how people can get into crypto, even if it's like investing $5 even in a new project. The way that they can see that develop over time is just fantastic for new projects that are really just at the heart of them, whether that's community or a DAO or et cetera, the things that are coming up. It is never too late to get into crypto. And I love that you've just mentioned so much about transparency. It is becoming more transparent. So yeah, I'm really grateful for this conversation, and I can't wait to be able to do this again in the near future. So yeah, I just want to say thank you, Todd, and thank you to everyone who's been watching today. Don't forget to share this AMA with everyone, with your friends, and also follow us for all the latest updates on Chromia's journey, as well as Phlomis Finance as well. That is a mouthful, I must say. But yeah, if you're ready to start building with us, head to our website for more information. My name is Claire. We've got Guillermo and Todd here with us. Thank you all for joining us, and we'll see you again next week. Thank you, guys.
Yeah, thank you, guys.
Bye. Thank you, Todd.
Bye-bye. Thank you, guys. Thanks so much. Really fun.
Fantastic. Thank you, Todd. We'll see you again very soon.
Bye-bye, guys.
All right, thank you. That is another one for our amazing AMAs that are going on a weekly basis. So we will see you again next week, and I can't wait to be able to see the content creation that you guys will be creating, as well as commenting on our YouTube video. So go ahead, and we'll be picking out the winners again very, very soon. So have a fantastic rest of your week, and we'll see you next time.